Is the real estate market going to crash? Are we headed for another absolute devastation, or are we headed into some of the best times ever in real estate? Let's find out. Hey there, my name is Mike Fritz. I'm the founder of Titanium Capital Investments and Power Up Real Estate. My greatest passion is helping real estate investors and entrepreneurs just like you create passive income and create the life they truly dream of. So make sure you subscribe to the channel and join our family of investors and entrepreneurs that are making a difference. And also turn on that bell notification in the corner so you get notified every single time we do a video, which, by the way, is every single day. And this video is brought to you by our multifamily masterclass. It's a free 60-minute training that helps you understand how to buy multifamily real estate without any of your own money. And if you've never purchased real estate with someone else's money, you don't know what you're missing. It's the greatest thing ever. When people first told me about this, I thought they were crazy. And so make sure you go into the description, click that link, and get your free 60-minute training. Is the real estate market going to crash? The answer is absolutely yes. You're like, wait, what? I watched this video for some encouragement. Well, let me tell you, the real estate market's always going to crash. Look at history. It's always going to crash. It just depends on when. So what most people mean is the real estate market going to crash soon? So are we in for a crash in the upcoming months? So that's a different question. Is the real estate market going to crash? Yes. And you always invest knowing there are cycles of real estate. There's down cycles and up cycles and down cycles and up cycles. The reason we invest in real estate is historically we've seen a trend, a northeast trend. It's continued to grow year after year after year. But what does that look like in the upcoming months and the next year or so for real estate? Are we in for a crash? There's one specific thing that crashes real estate more than anything else. And it's when supply outruns demand. When supply and demand get out of whack and you have way more inventory than you have buyers, my friends, you are in the middle of a crash. I remember in 2008, 2009, you drove down the street and all you saw is real estate signs in every single house. It seemed like, not literally every house, but every time you drove through a neighborhood, it was house for sale, house for sale, house for sale, because we had lots of inventory. Now, the reason we had that inventory, we're going to chat about it in a minute, but the fact is we had more inventory than we actually had people that wanted to buy it. That, my friends, is the number one reason a real estate market crashes. So what you have to know is, are we headed for a crash as well? What does our supply-demand relationship look like right now? Well, right now, our supply-demand relationship looks like we have an extreme amount of demand and a very short supply. That's why you see a massive spike in prices. If I was to create a car that everybody loved and I was to design a car, but I only made 5 of them and millions of people wanted this car, what does that do to that car? Drives up the value. If you don't know that, you do now, but it drives up the value. The less there are of something, the more valuable they are, right? So if that's true, which it is, and it is proven true over and over again in multiple industries and markets, it's the same with the real estate space. When we have a lot more buyers and a lot less homes, guess what it does to the price of those homes? Drives them up. It drives them up. So the question is, the question is not, is the market going to crash? It's the wrong question. The right question is, are we going to see a shift in supply and demand? That's the question. And then we can get more specific on what actually causes supply demand flips. Like one of the things that we just went throughout the COVID-19 pandemic is it changed the supply and demand. We had a healthy supply and a good demand, and we still had more demand than we had supply right before COVID. But right when COVID hit, a lot of people didn't want people in their homes, so they took their homes off the market, and our supply shrunk overnight. It shrunk overnight. Well, when it shrunk overnight, we had a massive spike in homes. In fact, I owned a house. We were in the middle of a fix and flip in March, April of 2020, right when everything was shaken out. And we went to market in May. I think we put it for sale. Oh my goodness. We had like 6 full price offers. We ended up selling it for like 20,000 more than we listed it for. It was crazy. And so it was a Midwestern home. And so it was a lot. We did really well on the home, but it was nuts. And so I say all that to say, it's one of those things when you have a short supply, a lot of demand, it drives up the price. So when you're asking about a real estate crash, what we're really asking is, do we think supply is going to go ahead of demand? And there's a couple things you have to know. The reason 0809 crashed is because we had more supply than demand. But why did we have more supply? Because the banks were giving out money at such a easy rate. You could get no money down loans for homes and a 50-year mortgage to get that payment lower, but they were doing them under different types of loan structures like ARM loans, or adjustable rate mortgage, ARM loans, and adjustable rate mortgage loans change. They adjust. And when it adjusted, people couldn't afford those payments. And what happened then? They foreclosed on their home, moved out, and became renters, a lot of them. And when a lot of foreclosures happened in 0809, what did that do? It thrusted a ton of supply to the market where the demand wasn't there. So what did we have? A real estate crash. So the question is, what can change supply demand? So the first thing is foreclosures. So you look at the foreclosure market is, do we see people losing their homes? Do we see a lot of people losing their homes? Right now in this market, we don't. We see some, and I mean, people are losing their homes all the time because they either just don't make the payments, aren't disciplined with their money, or lose a job or whatever. But so that can happen. But right now, we don't see that foreclosure happening at the rate that we certainly did in 0809. Another thing that can shrink supply and demand is rising interest rates. So if interest rates go up, it can make people change their buying patterns. But this is often, this is a kind of in relationship to the amount the interest rate is raising. So if the interest rate goes up, history and data actually prove it doesn't necessarily change if people buy a home, it changes the size they buy. But if it goes up high enough, it can change buying patterns. So interest rates rising can change supply demand. Another thing that can change supply demand if it becomes really, really hard to get a loan. So if banks are tightening down, one of the things that wouldn't loosen up demand in 0809, a lot of people would have loved to purchase homes at those depressed pricing, but banks became so strict because they're kind of what caused the crash. They became so strict with money, and you had to have 20% down no matter what. Well, if you wanted to buy a $200,000 home, a lot of people didn't have 40 grand sitting at the bank. Or if you want to buy $1 million home, a lot of people didn't have a couple hundred grand sitting in the bank. So it couldn't shrink, it couldn't shake loose demand. And so when you had all these people buying these homes, or all these people losing their homes, more demand wasn't created because it was harder to get loans. Another thing that can shrink supply demand is if employment goes down. There's a lot of people losing their jobs, and there's not income being produced that can trade and be spent. And so if people are losing their jobs, it can shrink supply demand in the real estate market, because demand is driven by people buying homes, obviously. And if people are losing their jobs, they're probably not thinking about buying a home. They're trying to keep their current living situation, which it could be keeping their current rental, it could be keeping the current home they live in, or whatever they're doing, but they're not usually moving. So those are a few things that can change supply and demand. But again, you have to understand, right now in the United States of America, we have 4 million more buyers than we have homes, and we have 5 million more renters than we have units in multifamily, meaning we have loads of demand, not a lot of supply. So we have to make sure that we actually fix the supply issue. So when you have a fix the supply issue, you're probably a little ways from a crash, because you can't really have a crash without having more demand than you have supply. You just can't, or more supply than you have demand. So there's a couple fundamental changes that are happening in the market right now. Number one, as you know, interest rates are going up to buy homes. We purchased our home in 2020 at the end, and we got it at 2.8%. Just crazy. Free money, essentially. 2.8%. Well, now it's some are at 5, some are at 5.5, some are even going to push 6. So interest rates are going up fairly quickly, and are going to probably continue to rise a little bit. Now, don't get scared, because again, that can slow down the purchasing of a certain kind of home for somebody. For example, if my bracket was a $500,000 home and interest rates go up, I might not be buying $500,000 homes. But what happens is I'll just go down and buy a $400,000 home. So if I really want to buy a home, I'll just change the kind of home I'm going to buy. So it doesn't necessarily crash the market. It just changes what buyers actually do with their money, and what kind and what size house they can get into. Now, will they wait that cycle out? A lot of times, at least the experts don't really believe so. The data experts like Robert Schiller don't really believe so, because people don't know when that's going to happen. So most people are like, well, I'm not going to wait to buy a personal home that I want until the market pans back out and interest rates come down, because that could be 1, 2, 3, or 5 years, right? And so they usually move forward. They just buy a little bit lesser home than a home that is than a home that is going to make that payment high. So the reason they buy a lesser home is because their payment is in their monthly payment range. The second fundamental change that's happening in our market right now and in our economy is we're seeing inflation come pretty hard. Inflation, we're seeing gas prices go up. We're seeing the price of goods and groceries and clothes and all kinds of our products and services are increasing in their price, and that will impact people's ability to buy size of home as well. Because if I was, let's say I made 10,000 a month and my expenses were 3, they might now be 5 or 6. And so gas prices going up 20 to 35% depending on your area, and with clothing and grocery stores doing the same. Auto cars are going up almost some 30%, and I need some even more. And so if your expenses are going up, again, that changes the size and amount of house you could buy. So inflation can change is if wages don't go with it. So sometimes if inflation goes up and I'm charging more for product and service, I can pay my employees more. But a lot of times businesses, that doesn't trickle down to the employees necessarily, because the reason they're charging more is because the cost of goods that they're buying costs more to sell to their customers. So that a raise in price is simply to absorb their current costs. So it's not necessarily to create more revenue for their employees. So a lot of people see inflation, businesses charging more money, but they don't say wages going up, and they're like, oh, see, the business owner's just keeping it for himself. It's not true. They're doing that to absorb the cost it takes to actually create the product or service to sell to their customers. And again, inflation happens for a couple reasons. Just on a quick side note, inflation happens anytime the government prints money, you see inflation. Because you have to think about this. Again, supply demand, right? The less there is of something, the more valuable it is. Well, when the government prints a bunch of money and throws it into the economy, then guess what happens? There's more dollars, meaning they're worth less. Something has to back that money. You can't just print a piece of paper and have it be worth money, right? And so something has to back the value of that money. It has to be backed by some sort of hard asset. And so again, anytime the government prints money, it decreases the dollar. So I mean, if you think about, the government doesn't make money. It's not a business. They take money from, we are its employees. So they allow us to work so that they could take money and then they can run the country. That's kind of the way that they see that, right? And so the government's going to do their thing, but they're going to take money from you to do it. So you have to understand, just the government creating money out of thin air, what that does is it decreases the value of the dollar. Now, understandably, I get why they do that when we were in economic times like we were throughout COVID, and they wanted to give a stimulus check. Now, remember, that was not a here's to pay your bills. That was an economic stimulus, because they put a pause on businesses and they didn't let businesses operate. That was to keep the economy moving, right? It was an economic stimulus, but the side effect of that is a decreased value in the dollar. After 0809, when we printed $800 million in order to get the banks to bail out the banks with the problem they were in, the value of the dollar went down. Same thing's happening right now. And with supply and demand shrinking and supplies being harder to get, what is that doing? It's driving the price up of those supplies. So with the printing of the money and a supply chain issue, you're seeing inflation. When we talk about a market crash, we also have to separate what we're talking about. So we're talking about not only often people are talking about, is the real estate market going to crash? But real estate has 2 categories. It has the buying category and the investing category. Buying category, investing category. And when you're buying real estate, that's what we're wondering if it's going to crash. Because yes, investing might crash in value, but most investing creates cash flow. And so you buy properties that create cash flow. So investing, we may lose our value in our real estate, but we won't lose our cash flow. In fact, a lot of times when people lose their home in a recession, they become renters, drives up the value of commercial real estate. And so on the other side of buying liability real estate, meaning real estate that costs me money, that could crash only basis on supply demand. So supply demand still has to be in a crash centric zone, meaning supply has to outrun demand or you really can't have a crash. So when you understand you're talking about a crash, we have to separate the kinds of real estate we're talking about. Investment real estate is a powerful place. There's never a time to not invest. You just shift your strategy. And then you have home buying real estate or liability real estate where you buy and it costs you money. And I'm not saying that's necessarily bad. We own a home that's a liability based piece of real estate. It costs us money. We don't make any money off of it. I'm not saying that's bad. I'm just saying you have to understand liability real estate always crashes faster than investing real estate because it doesn't create any revenue. Thanks a bunch for tuning in today. Make sure you go into the description, click that link, get your free 60-minute masterclass on how to bust into multifamily real estate without using any of your own money. Love you all. See you in the next video.